Alright, let's look at how you can install the pivot points and how you can apply them for your daily trading. All trading platforms have the pivot points indicators already installed on the platform, so all you need to do is just apply them to your chart. And for me, I always prefer doing my analysis on TradingView and not the MT4 platform, because it saves it automatically and I can save my template. So let's start. First of all, you come to where we have these indicators here, click on it. This dialog box will pop up. Click on the search icon beside there and type in pivot, and this is what we have: pivot high, low. Then from public below, these are indicators being coded by other trading users and uploaded, but use the normal pivot point standard. So you just click on it and this will appear on your screen. You can see there are different pivot levels for different days and trading weeks. So you come here, click on the settings, you click on settings, and here we are. You can choose your font size, choose any font style you like. PP, I like changing my PP. I don't like my PP to have the same color with others, so you can make your own be any color. Let's say you can say purple, your PP is purple, and R1, S1, everything. Then input. Now make sure your pivot types is the traditional pivot level. Don't use the Fibonacci, UD, Classic. There is a little bit difference between them, but the basic one is traditional. Use the traditional pivot point. Then time frame, you can choose your time frame, daily, weekly. Remember, during the presentation, I said if you are a swing trader, if you are a day trader, you can apply the daily pivot, but you trade them on the 1 hour and the 4 hour charts. If you are a swing trader, use the weekly pivot, but you trade it on the daily. So for the purpose of this, I'm going to use the daily pivot, and also I'm going to use the weekly pivot here. I'm a swing trader, I have to use what I've been using. Then I'm going to reduce the number of pivots back to 1. Reduce it to 1. Then you apply OK. I don't know. Reduce it to OK. So the settings is done. You can untick this show historical pivot so that you have the recent week and day pivots, and click OK. So this is what we have here. These are the pivot levels for the week, for the previous week. This is the PP here, and the S1, S2, S3, and the R1, so on to above there. So this is how you trade. Right now on gold, price is at R1. Now remember, I said you don't just trade the pivot levels only. You have to combine them with other technical tools. First of all, when trading the pivot, you have to first look at what is the market structure. Now, I can go to my weekly. I'm a swing trader, so I confirm. I do my analysis on the weekly time frame. And now, I go to the weekly time frame. Now, where is price at, and where is price heading to? I can see here that price is at what, where is approaching resistance level. So I plot my resistance, and here is my support here. My support level is here. These are key support levels, and here is a key resistance. And also, if you can see, price is making a series of higher highs into the resistance level. Series of higher highs into the resistance level. You can see here, this is a higher low here, another higher low here, another higher low here, and most likely this will be another higher low here if price breaks through this resistance. When you mark your support, your key support and resistance, and also you identify what price have been doing for, let's say, for the past 2 to 3 years, you have been able to determine your market structure. That is one. Now I'm confirming that price is now moving on an uptrend. Now we come to the daily. I go down to the daily and look at what price is doing. Now this is the daily. If you can see this with me here, that price moved up here and at the time is consolidating. So if I should do this, look at this. Let's look at this. Follow me. What is this? Price breaking out of correction. And also, if I should say, okay, fine, let me take plot my FIP and see what price is doing. I pick it from this low down here to this highs. Yeah, you will realize that this point here is a 38.2% retracement level. So you see how I'm confirming the trend and the trade direction with other technical tools. Let me take this off. I need a clean chart. So you can see price now is making moves into the resistance. And now let's see how we can use our pivot here. Our pivot is up. Price is at where? Resistance. And you can see price rejection from this high here. So since we are having rejections here, you can look for selling opportunities from this outright resistance 3, but you need to go to the lower time frame. And look for more confirmations, maybe chart patterns, candlestick formations, and the rest of them. Right now, all I can see is an ED about to happen here. This is a divergence here. So if I'm to trade this pair now, what I will be looking for, I'll be waiting for price to break down, retest, then I'll take my sell entry from here, where my stop will be above the resistance 3. So that is how you apply the pivot in your everyday trading. you don't just trade based on pivot levels alone. You have to combine them with other technical tools and trade. If you are taking your trade here, from here, your target will either be, your target will be your first target will be at the R1. First target will be at the R1, and your final target, if you are a swing trader like me, your first target will be at the R1 and your final target will be at the R2 for that move, for that particular move. Then after that move, you have to wait and see what price will do on this zone before taking your next trade. So that is swing trading. That is how you swing. You just, after doing your analysis, you just catch that swing. Because I believe, for me, we have a weak dollar already. Dollar is going weak. I believe on the lower time frame, my lower time frame, which is the 4-hour, I believe price will find its way, keep consolidating on this till it breaks down. So you don't have to rush and enter this trade. Always wait for the breakout, a retest, or price correction, then you join the trade. That is how you combine your pivot levels with other technical tools. Now let's look at another example. Let's look at which pair. Can we look at the dollar, euro dollar, euro dollar. Okay. And this is euro dollar. First, alright, let me take this off. First, let's look at the market structure. Let's look at the market structure. Alright. Without even plotting your trend lines or support and resistance, you know that price is moving a bit sideways. Now this was a clear, here was a clear uptrend, here was a clear uptrend, here we had a clear uptrend. Price is moving on a downtrend here. It's not really moving downwards, rather it's correcting. Why I'm saying that is because I'm not seeing series of lower highs and lower lows. I'm just seeing the market being a bit choppy. So this is a correction for me. You go to your, let's say, daily. Okay, fine. You plot your support first and resistance from here. Let me just do that for you guys to see. These are your key levels here. This is a key level here. This is a key level here too. Remember, there's no need plotting too much levels on your chart. Just pick the key point, the one that is very obvious to your eyes. And I move to the daily time frame. And on the daily, we're already having this descending wedge here. And you can see price have broken out of the descending wedge and is above PP, traded on R1, break through the R1 and break through the R2, and close above the R3. So right now price is moving up. Now we have two confirmation now with other technical tools. One is that price was on support. Price was on support here on the support level here, and it bounced. Now two is that it has broken down. It has broken this descending wedge resistance. Three is that price is above PP. So you remember, if price is above PP, you look for buying opportunities. Another thing is also that price have closed above R2, confirming the move upwards. The only way you can take this trade now, enter this trade now, is that since price is already closing above the PP, you may likely see a price correction back to R2 before a continuation. So you go to your lower time frame, and what are we seeing? Price moving up gently, price moving up. So all you need to do is just maybe draw this trend line here and wait for price to move from above, come back and retest your trend line. And you can see the trend line also corresponds with the R2. I don't know if you are following me. The trend line also corresponds with the R2. Look at this. So if price comes back down and test it, and we have a rejection on this level, you take a buy from there, placing your stop loss below R1. Below R1. But if you are a conservative trader like me, you can place it below the PP if you need a wide stop loss. So your take profit level will be the R4, the resistance 4, and the resistance 5. Or better still, you can go back to and look at the market structure and place your final target at this zone here, at the key support zone here. This will be your final target here. Remember when we were discussing the chart patterns, this pattern here, the descending wedge now, the final target is always up here at the end of the structure. So your TP1 right now can be at the R4, here, and your final target will be at the 1.156 price zone up here. So you don't just have to trade just base your trade adjustment on the pivot levels alone. So you confirm them with other technical tools. Alright, let's see if we can do one more example. Can we use the NZD card? This is the NZD card. If you guys were following me on this trade since January, in fact December last year, I had this channel on, and I still remember after price made this move down, and we had this consolidation here, and price went up again. So many traders was like, price is now making a bullish flap, and I was like, no. To me, I was like, no, this is not a bullish flap, because the market structure says we are on a bearish move. Just look at this. What is price doing here? Are these not series of lower highs and lower lows? The structure is just forming, so it can't just end right now. It has to move on and on and on and on till we get down. So price went up again. So it traps so many retail traders on this with this move here, So and it's now going back down after the bearish engulfing candle here, and price is now going down. So you can still join this trade, but this is how you can join it using some technical tools. So first of all, we have identified the structure. We're on the downtrend. Remember, you don't have to trade against the trend. So you go to the lower time frame, you go to the daily. What do we have here? Price moving down. First of all, I don't know if you notice what I'm noticing. This is a slight move down here. Boom. And all of a sudden, price is what? Doing this. Is this not a bearish flag pattern? That is one. Ignore what price is doing here. This candlestick formation, because to me that is happening in the middle of nowhere. That is not the key support zone. So like this candlestick formation now, in a way, is trapping buyers. Buyers will feel, oh, price will still keep going up to this level here, back to this level again, but it will not. It's just a price correction. This is just a daily price correction. So how to trade this is, now you put in your pivot. What do you see? What do you see? What do you see? Alright, we see price rejecting on the R2, you can see, and it's now ranging on the R1. So all you need to do is you go to the lower time frame, your trading time frame. So your trading time frame, and what else do you see? You're seeing this. So first, this is the correction here. Oh, wow, I'm seeing something already. So this is our trading time frame. Price are broken below. This is our trading time frame. So all you need to do is wait for price to break below. Alright, wait for price to break below the PP. Wait for price to break below the PP, like this, close below the PP. Then when you have a price correction, you join the trade. You now enter your trade, making R1 your stop loss or R2 your stop loss. For me, I'll place my stop loss above the R2, and you join the trade and write it down. And since this is a daily structure and we have a very long way to go, you can take this trade as a swing trade or also as a position trade. And looking at the structure, we have a long way to go. When you have that entry, once price reaches, you can take your final TP if you are swing trading, and wait for further price actions to know if you can still continue selling back to the 0.84 zone. So that is what I can cover for now. More examples are coming, so just relax. More examples are coming. So that is what I can cover on the pivots examples. So if there is something you don't understand, kindly ask questions. I will be here and I will give more examples and examples. Thank you. Don't forget to subscribe to the channel. That is very, very important.